All right. Another big day in the rear view mirror. Hope you guys had a great day out there. Had a fantastic day today with all of our clients in the trade room. But it's back to work again here this evening. Time to roll up our sleeves, get prepped up, because we get some more opportunities coming right around the corner, starting in just a few hours from now. And of course, it's Wednesday evening. It's April 24th, 2019. My name is Joseph. And this, of course, is your nightly newsletter. Now, remember, I help new traders find predictable, dependable, profitable trading opportunities using a simple three-step trading strategy that we teach and trade together every morning in our trade room. But my job tonight is to identify the best opportunities, the best levels, the best setups, the best opportunities setting up for tomorrow. That's Thursday, the 25th of April. I'm going to grab the oil market tonight. We're going to dig into the S&P and the Nasdaq. Got some big stuff to talk about in the Nasdaq. Gold, of course, is on the schedule here this evening, and we'll finish up tonight on that mighty euro. I'm going to jump in here to the black gold first, the Texas T, the crude oil futures, because crude is starting to show signs of maybe a big unraveling of that news report that happened earlier on this week. Let's grab the oil chart first, and let's kick this session off right on a good note here tonight. Now, I take a look at the oil chart here this evening, and it's quite easy to see that we are tumbling lower here right off of these highs. In fact, right, your typical measured move puts us down around that 65, 61. So we're definitely bearish right now, right? But the problem is we finished up today's session with a trading range, right? Markets, of course, chopping around, going sideways, right, inside of that range-bound market. So I know we're bearish right now on oil, but I can see based on that range-bound scenario, I can see that sellers are clearly rejecting the idea of going lower right now. So in my eyes, the best way to sell this bear market, right, bear market being right the key component here, is to find levels of resistance that we can trust tomorrow to combine along with our entry patterns. And one of the things I'm looking for right now is I'm going to combine this little channel we have going down, right? I want to sell off the top of that channel. And of course, I'm also going to take this trading range, and we'll talk more about this tonight, but I'm going to grab that trading range and I'm going to create a couple range expansions up here to give me a real nice little overlap on that up inside the battle zone. So my goal for tomorrow is I want to go up and sell back down. I'll talk about three different patterns I'm looking for to sell off of that high. I'll also talk about, right, what the market will look like for this to be a reversal and how we would trade that, right? Knowing if we want to trade it or fade it, right, if you will. And then, of course, obviously, we got to make sure we're ready for if the market drops lower, because like I mentioned earlier, we may be seeing a great unraveling, right, of that big move up we saw. Remember earlier on this week, we heard about the oil waivers, right? The U.S. and Iran, the sanctions, and that's what led to that move up. So got a big target down there at that 64, 63. I'm not sure if I'm ready to call that number just yet, but we are definitely keeping our eyes open for that move going lower, because it's going to be a little bit tricky as you get down here because you're at the low of that bigger range. So we'll talk about all these scenarios. But for right now, though, I'm trying to sell off that high, right? And of course, I'll keep my eyes open for that reversal. We'll dig into that a lot more tonight on this video. And of course, over on the S&P tonight, right? Love the E-minis. We'll grab the S&P and the Nasdaq in tonight's video. You can see right now the bears definitely have a slight edge on this S&P right now. But remember, even though we have short-term bearish momentum, if you zoom out on this, it doesn't take a very good memory, right, to remember that earlier on this week we had that big run up yesterday, right? Of course, earnings explosion yesterday. Combine that with some good numbers out of China, some good numbers out of the earnings season right now. We had that big blast higher. Well, of course, you guys watched last night's newsletter, right? So we knew we were buying those pullbacks. And so it looks like that's what's happening right now, right? The market is bearish in the short term, but every time the market pulls back here, it's obvious that buyers are buying those dips. Now, we identified this area last night on the newsletter. You can see how many folks were waiting on that. And we're right there again, right? We are right there again right now, right inside of that battle zone. So it's definitely easy to see the buyers are taking taking nibbles. The key word there is nibbles, right, to the downside here. But at the same time, though, we got to be worried about there being more sellers coming in off that high. So what I'm going to talk about tonight is I'm going to talk about how we can buy off this low, how we can sell off the high, and then how we know if we can trust this thing going all the way up to that pendulum swing because, well, let's grab the Nasdaq because the Nasdaq is dealing with the same thing, right? The Nasdaq just completed that pendulum swing. We take a look at that Nasdaq. Here's the Nasdaq chart. Looks very similar to the S&P chart, right? Big move up earlier in the week, trading range, right? Wise traders are buying the dips, buying the dips, buying the dips. And of course now, much like the S&P might be, right? We have that move below the range into that move above the range. And so so Nasdaq just finished that off. So we're going to put all that plan together for the E-minis here tonight, but bottom line right now is on the Nasdaq is obviously bullish right now, but I'm talking about what a horrible place to be buying up here, right? I don't want to buy up around these highs. Do I trade it? Do I fade it? You know, what do we do with this scenario? Ultimately, there are three things I'm looking for in the Nasdaq. One is the break higher, right, to trade it. The other is the collapse lower to fade it. And then, of course, the other would be looking to buy down right at these lows. So I got three different scenarios I'm looking for tonight on the NASDAQ. And again, this NASDAQ might just be a little bit of a glimpse into the future on what that S&P might be. Over now on the gold. Now, gold's the easy one tonight. Get a nice, easy trending environment here on gold. The market's bullish. In a bullish market, I want to find levels of support. It's a trending market, so of course, I'm going to find some channels here, draw off those highs, bring it down to that low, and you can easily see those support levels down here now, right? Nice, easy support levels down here. And I would love to be a buyer off the low, right, of that channel. And then not to mention, right, look at this nice reversal line here. That reversal line is great. In fact, that reversal line is great right there. So these are great spots here in and around this 75.7, right, 76 area inside of that battle zone. So I've got one plan. I got about three different patterns. I'm looking forward to buy that dip. I'm also curious about that little lower high right now. This might turn into a range, and so we'll talk about the best way to go range bound on this tomorrow. We'll talk about how to trade a range, and of course, right, trying to get that next measured move here, right? We'll talk about if the market breaks higher. We've got to be careful because we're running right into some of these big highs from earlier on in the month of April. So we've got to really be careful. If the market does shoot higher, we've got to have a plan. That way we're not trading on emotion and we're trading based on statistical reliability. I'm going to break all of those down on gold tonight. And of course, we'll wrap up tonight on the euro, right? Always love that euro. Euro keeps on loving on that big bear channel. We talked about this in last night's newsletter, right? Big, literally a month-long channel here right now. And every time it goes up to that channel, it keeps getting smacked back down again. Well, now we have an overshoot at that channel. Yeah, overshoot. So overshoot to the channel. Overshoots usually end up doing one of three things. One would be a range down here. You can see I'm kind of already preparing for this to be a range. So one scenario is going to be a range-bound market. We'll talk about the best way to trade that tomorrow. The other scenario would be, and I know this is going to sound crazy, but oftentimes overshoots lead to overshoots and full reversals. So we'll talk about what a reversal will look like on the euro. And of course, we'll also talk about, right, how to use these levels of resistance, right? I've got my prior swing low, that's a level, right? I've got my trend line, that's a level. And so obviously we'll talk about how we can sell right off of that high tomorrow as well. So three different scenarios we're getting all prepped up for here on that euro. So we got the euro, gold, NASDAQ, S&P, crude. Boy, we are locked and loaded here tonight. But before we jump into this video and go over all the setups I'm watching for tomorrow, I want to make sure you never miss another video. In fact, I want to make sure you're the first one to get your hands on this nightly newsletter every evening it goes live. Now, I send an email out to out to everyone who's on this list right before I publish the newsletter every evening on our YouTube channel. So if you want to be the first one to get it, if you want to make sure you never miss another great video video newsletter, join the mailing list. It's easy. All I need is your name, your email address, and then hit that subscribe now button. Now just remember though, when you hit that subscribe button on the right-hand side there, you have to check your email inbox, because I'm going to send you a verification link to click on to verify the inbox is correct, and I'm also going to send you a welcome email with a bunch of goodies, right? So make sure you check your email. Oh, and don't forget, if you're using Gmail or any other free email service, a lot of times those emails go into your spam folder, your promotions folder, your junk folder. God knows how many different folders I have these days on Gmail. So if you don't see that verification link in there, right, check your spam, check your promotions folder in Gmail. That is usually, right, where those emails end up if you don't see it in your inbox. And then I've got one more thing I need from you guys here this afternoon, and that is feedback. I'm always trying to make this video a better place to learn and earn every evening. It would mean the world to me if you take a minute of your time. Tell me what your favorite market is, right? Tell me which market you would hate to see us remove from this newsletter. And also, what's your favorite pattern, right? How do you like to use this newsletter? What do you love? What do you hate? I'm always looking for ways to improve this video every evening with you guys, and I really, really value your opinion and all your feedback. So what do you love? What do you hate? What would you encourage me to do more of? And what do you absolutely want me to remove off of this newsletter? Drop me those comments in the comment section below. And please, if you watch this video every evening and you love the newsletter, give me a thumbs up on this video. I always means the world to me how many people give me so much great feedback. So give me some comments in the comment section, what you love, what you hate, and if you love the nightly newsletter, make sure you give me that thumbs up here on YouTube, because it goes a long way, right, to help expose this channel to new traders out there. And don't forget, if you have any questions, you can always call me in the office. I'm always here. I'm a real human being, right? I realize most websites these days, they're all chat bots and robots and autoresponders and all this garbage out there. But I'm a real person. My wife Megan and I work real hard for other real people, and we would love to answer that phone when you call. So don't be afraid to pick up the phone. You're never bothering me. I'm here in Los Angeles, so I'm a couple hours ahead of you guys always. So make sure you pick up the phone, call the office if you have any questions about anything we talk about in tonight's video newsletter. All right, let's jump right in. Get some work to do tonight. I appreciate you all being here, and I'm sure a lot of you guys were up late last night. Those 2 Game 7s, I can't believe San Jose came back from that 3-0 deficit. Oh my goodness, I could go on and on, but you guys aren't here to talk about playoff hockey. You guys are here to talk about the markets. So let's dive into that for tomorrow. Now don't forget, tomorrow's Thursday, April the 25th. Right? Tomorrow is the 25th day of the month of April. Let's take a moment to kind of rebound here where we are. Let's recap here for a moment. We're going into earnings again, right? So it's this time of the year again, right? Every quarter, well, actually, it's just after the end of each quarter, we have earnings season. And what that means is either after the close or just before the open, we get, earnings reports, quarterly earnings reports. Tomorrow, we're going to hear from companies like Amazon. I believe Microsoft is tomorrow as well. So we've got quite a bit of earnings coming out at the end of the day tomorrow. I believe Amazon reports after the close tomorrow. So my only concern about this is because Amazon is such a giant, and because it makes up so much market cap of the Nasdaq, obviously the index itself. When it comes to the Nasdaq, right, the index of all the tech stocks, right, there's only a couple that really move everything around, right? Facebook, Amazon, Microsoft being one of them, right? Being a few of them. So we have those earnings reports tomorrow afternoon, tomorrow around 4:30, right? Right after the closing bell. What that means for you tomorrow is tomorrow might be a bit of a slow session on the Nasdaq. And we're going to grab a look at the Nasdaq obviously tonight and go to more details on this. But be aware, tomorrow is a day we have a behemoth, right, report coming out tomorrow after the close, right? And that should affect pretty much everything that is Nasdaq markets tomorrow. So if I had to guess right now, I would guess tomorrow the Nasdaq might be a little bit subdued, a little bit sedated, as traders don't really want to get into big positions before that big report comes out tomorrow afternoon. Hopefully I'm wrong. Hopefully I'm wrong. I always start every day with a positive attitude and optimistic mindset, right? So we're going to come in tomorrow and we'll do it like we always do, but don't be surprised if it is a little bit slower tomorrow, and we know why. Traders are waiting for those earnings reports, right later in the session tomorrow afternoon, tomorrow evening. Now, as far as the news on the schedule tomorrow, durable goods and jobless claims, those are 8:30 news, typical Thursday morning. Jobless claims at 8:30. I don't think that jobless claims will have too much of an impact, but the durable goods definitely will. You're always watching markets right around those 8:30 news reports on Thursday morning. So we'll be in the trade room tomorrow at 8 o'clock Eastern time, and obviously we'll be trading it right together here. And then, of course, right, Thursday, we got some, again, 8:30 news tomorrow morning, Amazon and the rest of the action, right, coming after the close. And that's about it. And then, of course, tomorrow night, we'll talk about the plan for GDP Friday. So make sure you tune in tomorrow night, because tomorrow night we'll wrap the week up with a big first quarter GDP, right, coming on Friday. We'll break that plan down tomorrow night because we have enough to work with here for tomorrow. So 8:30 news, after the close earnings. And remember, right, tomorrow morning we'll be in our trade room, like always, at 8 o'clock Eastern time. We're going to put the plan together, and we'll execute that plan with all of our clients tomorrow in our trade room. Hope to see you there, right there with me. All right, let's jump in here. Let's get our hands dirty here right now. Over on the oil. Oil is a bear market right now. And as I mentioned earlier, we've got one big leg, two big legs, and we're just a little shy of that measured move. Now, whenever I find myself this close to a major level of support like this, right? One leg, two legs down. Anytime I find myself in a position where I have to be very careful about selling into support, I always start looking for those kickbacks and to fade the move higher. So what I mean by that is because I know we have a lot of support down here, not to mention the low of that larger trading range, right? What I'm expecting sellers to try and get kicked back. And then when it gets kicked back, I'm expecting buyers will probably try to pick it up and run with it, right, going back in the opposite direction. Where those buyers try to pick up and run with it, that's where we're going to have our shot, right, to make what I would assume to be the most reliable profit, right, tomorrow morning. So that's one thing right off the gate here tonight is one leg, two leg. We're right into major support. So I'm expecting whatever goes lower to probably get kicked back, and then of course we'll have to sell that move right back down from there. The big deal right now, though, is if I can kind of simplify the entire system here, the big move is, or the big deal, the most important clue on this is a strong move down into what is clearly a trading range. Now, anytime I see a market that's bearish before it goes into a trading range, I'm always looking to sell up above the high of that range using a very simple pattern. It's called a two-try failure pattern. In other words, I let the market go up, I wait for it to pull back, I let it go again, right? Hence the word two-try failure, one try, two try, right? And then once I see it start to fail the second time, I sell right into those stops, right? We call these a two-try failure pattern. So again, we know there's a range here. We know the market will likely get kicked up, right? Those buyers, like I mentioned, they're going to probably try to hold that pullback and buy it. Where they try to buy it, now I know exactly where their stops are, and I can look to sell right into, right, those stops, right? These patterns happen all over the place, right? We go up, we pull back, the buyers try to buy it, right, and we sell it back down to retest those lows. Those patterns happen all over the place. Now, look what else we have here too. If I draw a trend line, right, off of those lows up to those highs, you'll notice this is setting up to be a nice little channel. And sure enough, look where that channel puts us. It puts us right above the top of that range. So now we can really kind of blend together, right, a couple of these strategies. We know we have a range. The range tells me one try, two try, back down in, right? The channel here tells me let's go up and sell the high of that channel. So how would I sell the high of that channel? I'm going to sell the high of that channel by looking for the buyers to try to buy that pullback, right? Imagine now, right? Imagine the market runs up, the moving average comes over, the buyers now try to buy it, right? They're trying to buy it. They try. Now we know where the stops are, and we can now sell right into those stops. In fact, we can not only sell into those stops, we can also sell the stops and then wait for the pullback, right? Wait for the pullback and sell the pullback from there, right? It's called a failure pattern, right, into a pullback pattern. So it's all right around the same spot there. Now, I know what you're thinking. What if they hold that pullback? Then what do we do? Right? What if they do? What if they hold that pullback, right? What if it goes up? What if we don't get that failure? Now what do we do? If it goes up and keeps going like that, well, that's actually a fine scenario because now I can mark up that high, bring it down, mark up that low. Now here's the kicker. Draw across that high right there, and that's where you're looking to buy that pullback. That's your pullback area. That's a sweet spot right there. And who knows, right? Maybe this trend line coming down, right? Maybe it pulls back and we get all that good stuff right around the top of that trend line too. I want to use that 1, 2, 3 reversal, right? Mark up that high, mark up that low. Remember, I'm not trying to buy that first pullback, right? I'm waiting for the pullback to hold, then I'll make the move, right? And look to buy off of that, right? Off of that low. So that's if we do get the move going higher. Now, the hard part's going to be if this market drops. If the market drops like a rock here, now we have to assume they're trying to get down to that pendulum swing. Now, a little bit of a blast from the past here, right? If you recall, we came in on Monday morning reading about the headlines overnight regarding the tariffs, right? The waivers, right? With basically between the U.S. and Iran, right? Iran, of course, they had some waivers, some export waivers, import waivers, and they're basically expiring those right over the next 12 months. I won't go into too much detail about that because it's irrelevant, to be honest with you. What caused this is irrelevant. But what is relevant, though, is we see that big, strong move up and we went to a range. Now, that range, of course, went higher. I can take the amount of the move above the range. I can take the amount of move above, and I can project it down below. We call this the pendulum swing. The range breaks up. The range breaks down, right? So that's where we're looking, right? We're looking for that target now down around 64, 63. So what do we need to do to sell this market right now? What do we want? How can I trust it, right? That's the big thing. How can I trust it if this market drops? Well, remember that 1, 2, 3 reversal? Remember that 1, 2, 3 reversal going higher? That's pretty much what we need to see going lower here. I need to see something very similar to that. In other words, I want to see a strong move down. I want to see a hold a pullback. And I want to see him run off that pullback. Then I'll mark up that low, mark up that high, and we're looking now, again, mark the sweet spot, to sell off of that high. Okay? That's the trade if it can get that 1, 2, 3 breakdown, right? That strong move lower. I don't want to sell it with just the first move lower. I want to get that, again, get that sweet spot after we get the 1, 2, 3 breakdown. Now, what if we don't get the 1, 2, 3 breakdown? Could we buy this? How would we buy it? How would I buy this market now? Very carefully, right? If we go lower here, right, and we don't get the follow through, because you're probably wondering, why wouldn't I sell that pullback? Well, because remember, this is a big range, right? This is a big range, and this is a small range. So what do you do with ranges, right? You sell high, you buy low, right? Don't forget about that, right? People are looking to buy down here. If at the very least, take profit on their short positions. So if we make a run lower here, the last thing I want to do is sell here. This is where everybody's buying now. So how could I buy this? Because after all, it's a bear market for crying out loud, right? I can't just be a buyer because we're at a level of support, right? That doesn't work very well. Just buying at support because of support doesn't mean very much. So here's what I'm looking for. I'm looking for a very specific pattern. If we see that market push lower, then watch closely. Let the bears try once to keep it going. Let them try twice to keep it going. Remember, the bears want to keep this party rolling. That's the proof we need to be a seller. Okay? I look for the bears to try once, try twice. Once I see them fail, and you bet I'll be keeping an eye on this channel right here, right? Then I'll be watching for that buy now going back up into that range, right? Let the bears try to sell it once, let them try to sell it twice, and then bingo, back up into that range. We call these a nested failure pattern, right? It's your major failure, 1, 2 failure back here, strong move down. It's 1, 2 nested going higher. If you watch my newsletter, you know the words to that song. Don't forget if we do sit inside this range here, stay patient, up, buyers try twice, back down again, or right, down 1, 2, and then back up, rinse and repeat. Now, I know I've covered a lot here right now, and if you're here for the first time right now, I'll bet this went right over your head, and I hope it didn't overwhelm you too much, but that's exactly why I want to interrupt this video for a second to make sure you know about our free trading course, because I have so much I want to share, and I can't do it all in this video, right? Not to mention, you probably need a lot of the definitions, the terms we use, and not to mention all the patterns. So in the upper right hand corner, I'm going to drop a link up there. I'm also going to put a big red button here for you on the blog here tonight to join the free trading class. So pause the video. If you're here for the first time today, or maybe you haven't done so yet, right? Grab that free course, learn all about failure patterns, pullback patterns, trap patterns, nested reversals, right? 1, 2, 3 reversals. Learn all my favorite patterns as part of that free trading course, right? You'll be thankful that you did. Because in the meantime, right, I want to keep going here right now because we have a lot more to talk about here. Now, over on the S&P here tonight. Now, the S&P is very similar to oil, right? We are bearish. But at the same time, though, you have to think there are going to be some bottom pickers down here looking to buy this thing back up. Now, if you just looked at today's session, it's pretty easy to see that we have connect the lows up to the highs, and this is a pretty darn well-behaved channel, right? Going low to high, high to low to high, right, and rattling around. So you would think that sellers are going to be waiting right above the top, right, of that channel, right? Absolutely. You would think that sellers are taking their profit down here, right? The bears will take their profit down here. Where's that dollar sign? There we go, right? Take your profit down there, right? And then up and then sell it back, right? Sell it back down again. So that's kind of what you're thinking overall. But let's go one step further. Let's go a little bit further out of the picture here. And as I mentioned earlier, right, we pretty much got what we were expecting today. Last night on the newsletter, we talked about that big run up, right, how it almost always goes into a range-bound market, and then, of course, how we always want to buy the dip, buy the dip, buy the dip. And if you look at it, you'll see what happened, right? These are failures. 1 try, 2 try, failure, right? 1 try, 2 try, failure, right? 1 try, 2 try, failure. These are the same failure patterns we just talked about on oil. What do they all have in common, though? They're all nice and low, right? They're all nice and low, right? What happens is when a market moves this far in one session, nobody wants to buy up here, right? The price is too high, right? It's like going to buy a car and spending $10,000 over the the price of it because for no good reason, right? You're going to lose money that way. So you don't want to buy high, right? If the price rockets higher, what happens, right? You pick your spots down here, and as it pulls back, you buy it as it pulls back, right? You get into at a much better price. It takes some patience, it takes some discipline, and of course, right? That's what we do as professional traders. We identify the situation, we wait, and then we take advantage right once we see it. So we know that as the market pulls back, we know there are probably going to be buyers looking to buy off of that low. Just because, I mean, look at this. If I was to draw where's halfway, right? So there's halfway right about there, right? So halfway is right about that 29, 24 there. So I would imagine, right, this area right in here, that's why I call it the battle zone. That's where we're going to battle, getting back into those positions to make the profit, right, going higher. So that's the overall plan, right? The overall plan is as the market keeps going lower, right, we're looking to scoop this stuff up, right, and take profit back up at the high. And then now we have this channel. So this channel kind of gives us all the information that we really need. I want to buy off this low, take my profit at the high, and then maybe eventually we get a shot here to buy through that high to get that big pendulum swing. Now that pendulum swing, obviously, remember the amount of the move below the range is oftentimes the amount of the move above the range, right? Don't believe me? Go look at the Nasdaq right now. We'll talk about that again in a moment here as well. So right now we got some pretty hefty targets here for the S&P, right? Target up at that 45. Now obviously the most reliable target is obviously back to retest those highs at 39 3/4. But from there though, absolutely we want to be looking at that pendulum swing at 29.45 and change up there. So we know that's where they're trying to go. They're trying to get back up to the highs. They're trying to get that big pendulum swing. How do we do that, right? How do we get involved with that? Well, first of all, let's get this out of the way here just for now, just so you don't have that in our way right now. I've got my one leg, my two legs, my three legs. So we're sitting right on, right, a major level of support, right, much like we are on the oil market right now. I want to be a buyer, right? I want to be a buyer, but the problem is the market's bearish right now. So remind me again, we just talked about this on oil. What was the best pattern to buy in a bear momentum? What was it again? It was called a nested failure. And you can see these everywhere, right? It goes down. What happens? The bears try once. The bears try twice. Shoots back up, right? It goes down. The bears try once. The bears try twice. Shoots back up, right? So we'll do it again. Bears go down. You got it. Bears try once, bears try twice, right, and get it back up. Obviously, the lower we can get this pullback, the better for us, right? So that's the way I'm looking to buy right off of that low. Now, the harder part here is going to be if it runs, right? Because ideally what you want is you want to see a good, let's just say, for example, we do get the 1, the 2, and the buy off that low. What you ideally want is you want to find a way into this trade before you get back to retest the high. So what's the best way to do that? The best way to do that is with a pattern called a two-try breakout. It's not really a breakout, but you'll get the point, right? Now, we know the sellers tried once, tried twice here. Can you guess what we're going to do again? You got it. Now, pay attention, though, here. This is a little bit different. Because we have a concern about overhead resistance, what's the best pattern? Traps, right? Traps. So 1, 2, but now you got it. I want to see a trap in here too now. So you'll notice they're a little bit different, right? If we don't have a lot of concern about overhead resistance, I just go 1, 2, and in, right? If we do have concern about overhead resistance, because again, this is the highs from earlier on this week, right? Because I do have that concern, I want to be patient and wait for that trap low, right? It's called a trap pattern. What I do is look for 1, I look for 2, and I want that second try to go a little bit further, right, than that first try. That way I can buy that trap and I'm not buying right into those highs. Now, I know what you're thinking, but wait a second, Joe. What if I want to sell off that high? How do I sell off that high? What I would do personally is I would use the same basic pattern. We go up because we know everybody's thinking long right now. What I would do is I wait for a 1, wait for a 2, and then sell it back down. Right? So now watch closely because the devil's in the details in this one, right? So we jump up, we get a 1, we get a 2, and a trap low. Notice how that pattern is written out, right? It's that lower low here. Okay, now, if we want to sell it, it's up, it's a 1, it's a 2, right? It's structurally a very different setup, right? The buyers try to buy it once, they try again, and we'll sell it back down right into those stops. All right, guys. And again, I'm just illustrating these for you right now. I have hundreds of examples of these patterns directly from our trade room by part of that free course I mentioned earlier, right? Either grab that big button below the video tonight on the blog or hit me up in the upper right-hand corner for that link overhead. So that covers us now, right, as we go back up and then back down. But could we sell this thing? Is it possible to sell it? Oh, absolutely it is. You know, I mean, we're only one bad earnings report from being right back where we were before, right? I mean, it was an earnings report sent us higher. You know, you live by the sword, you die by the sword, as they say, right? I think that's what they say. They still say that, kids? I don't know. I'm kidding with you, obviously. But obviously, right, want to see that 1, 2, 3 breakout, right? That 1, that 2, that 3. Remember, you can't just sell a move lower because it could and then right back up again. Right? So it's going to be what? A 1, a 2, a 3. This is obviously not done to scale, okay? But what you want to see is you want to see a strong move down, get the moving average coming over, pull back to the moving average, strong move off the moving average. That's going to be the dagger in the heart for the bulls, those poor, poor bulls. And of course, right, we'll draw off of that low, up off that high, create that, what I call a hidden channel, and then drop that hidden channel in, again, sweet spot, right off that low. It always amazes me how well those patterns work. And they work on all time frames. The trick is being patient. And that's the hardest part. The hardest part for that 1, 2, 3 reversal, which I'm talking about right now, is staying patient. Because you have to feel like, right, when this market starts dropping down here, it's going to feel like, oh man, I missed it. But sure enough, once those sellers stop selling and they pull back, you'll be ready to capitalize on what is normally the big move, right, of the day. And then, of course, the target is right back to where the beginning of this week started, or back to the beginning of yesterday morning's, right, big earnings bump. So now we got a good idea there for the S&P, right? S&P is pretty basic. Again, we know where we're looking for this move back up. Don't get too greedy, though. Don't forget the high of day there. Now, the S&P might just be a little bit of a back to the future, right, for the Nasdaq, because the Nasdaq, you'll notice here, is pretty much doing exactly what we just talked about, right? Nasdaq, of course, same basic idea. Bull market into a trading range. And as we talked about in last night's newsletter, you know, this is the same battle zone from last night's newsletter, right? We're trying to buy the dips, buy the dips, buy the dips. We mark up those lows. Those lows tell us where levels of support are. Mark up the lows, buy off those lows. And then again, right, you'll notice I can take that channel, make it a channel here, right? And you'll notice here, they just got this pendulum swing, right? The amount of the move below the range, the amount of the move above the range. So the pendulum swing is very, very real. It works remarkably well. I still sometimes get butterflies when I see how well, right, these pendulum swings work. But the bottom line, though, is now the Nasdaq we're in a horrible spot. You know, remember, we talked about this earlier. We get those earnings reports tomorrow afternoon, right? So we might find our way kind of stuck in the mud here for a little bit on that NASDAQ. Here's the problem. We're definitely bullish, but we're too high to buy, right? I'm too high to buy right now, and I'm way too bullish to want to sell this market until we see, right, a nested failure pattern. So we've really got a couple scenarios here right now, right, that I'm watching for on this NASDAQ. Really at this point, there are basically three situations you're looking for. One is, does this thing keep going? And we'll talk about that, right? Two would be, can we sell this thing, right? In other words, can we trade it or should we fade it? And then once we do get back down here, could we buy this sucker? And then, of course, what would it look like if it keeps going, right? So we want to make sure we get all the bases covered. You know, it's like anything else, right? You know, once you get some experience with this stuff, you begin to realize, okay, as long as I just plan for all these different scenarios, I'll have a plan in place. And the key is to always have a plan, right? And that's what I do for a living, right? I help people all day, every day, formulate the right plan. Because as long as you have a plan in place, once you see it, you can trade it. What happens is that when you don't have a plan, when you're not ready for something, you're left with split-second decisions. And last time I checked, most human beings are not very good at making split-second decisions. They aren't, right? It's very difficult to snap, right, into being a disciplined, conservative, right, well-balanced trader. Okay. Bottom line is, let's make sure we're ready for whatever the market throws at us. How do we buy this market tomorrow? Right? How do we buy it? What would be two buy orders tomorrow? One would be, I'm not going to buy here. So one would be, going to see a 1, 2, 3. Then what? Yes. Find that high. Find that low. Mark up that high, right? And then we're buying that pullback. Now that pullback will probably be a failure, right, into a pullback setup, right? That pullback will probably be a failure pattern, right? That moving average will come over. Moving average comes over. It'll probably be a failure, right, into a pullback combination like we talk about all the time on this newsletter, right? So it'd be a failure, right, into that pullback combination. Most important thing, though, is 1, 2, 3 breakout, mark up those highs down to that low. In fact, you can already kind of see those wicks down there lining up right now. Then once you've got those, right, once you got that low, mark up that high, and there's your sweet spot right there, right? And again, we'll choose which pattern we're going to use once we see the condition of that pullback because, you know, for all I know, it could be a two-legged pullback. We could draw a trend line down overhead and use that trend line for a two-legged pullback, right, to buy it right back up again. So there are a lot of different patterns we can look for to get in that location. And again, I'll sound like a broken record here. I talk about most of these patterns inside that free trading course that I've mentioned already a couple times here. So make sure you grab that if you're serious about your trading success. So that's the buy side on this, right? That's the buy side on this. As far as the sell side goes, it's a very strong push up. We are overall bullish. So how exactly do we sell it? We do it just like this one. Right? We let it go up. The buyers try it once, the buyers try twice, and we sell it back down again. Right? So price goes up, buyers try once, buyers try twice, and we sell it back down. Now, I have a very simple set of rules that we use for these patterns. I go over most of those rules inside that free course, so make sure you check that out, right, to learn more of those rules. But the most important thing right now, though, is let those buyers tire themselves out. 1, 2, and then back down. So now we know how we're going to buy it as it goes higher. Now we know how to sell it as it goes higher, right? How do we buy it off that low? Let's say, for example, we get that 1, that 2, and that collapse back down. Now what do we do now? Well, here's the reality. That move lower is probably going to be a very strong move, right? Now, what do we always talk about? Momentum. Momentum is always an important factor. If it collapses all the way back down, that market's going to be a bear market on entry time frame. So you've got to assume now those sellers are going to try once, they're going to try twice, and then we can safely now, right, be a buyer, right? Because that, for example, back here, right? Good example. Right? Strong move down. That big collapse down says the sellers are probably not going to give up after trying once. They're going to probably try again. See that right there? That's exactly what you want to wait for, right? So if we do get this moving lower here, it'll be a bear market. It's a very big move down. Let those bears try once. Let them try twice. Now we buy into it, right? That'll prevent you from being a buyer into that failure, getting stopped out, right? Like you would have been stopped out right there, right? Strong move down, failure, nope, next try, right? That's the same basic pattern right there. All right, guys? So as we go lower, right, it's 1, it's 2, and it's right back up. And then obviously, if we get back down to that low and we then, of course, 1, 2, 3, right? If we do happen to get a tumble back down to those lows, a lot of times what'll happen is it'll sit at those lows for a while, and then 1, 2, 3, you guessed it, mark up that channel, right? And we're selling off the top of that channel. Again, those take patience. But the reality is you are crazy to sell down here, right? If a strong move down, if you're trying to sell this pullback right now, you're crazy. Because a lot of buyers are definitely waiting here just to buy it right back up. So the only way you can really confidently sell that move lower is to wait for that follow through. Then mark up the channel, find your sweet spot now, right, and sell off that sweet spot. And again, we're going to go over all this tomorrow in the trade room. That way we know exactly what to do, because we always want to make sure that we have a game plan for everything. All right, stay out of the middle, buy those lows, sell those highs in the Nasdaq, and then how about that yellow metal? The yellow metal's the easy one tonight. It's the easy one tonight. Gold is, oh my goodness, gold is bullish right now. Haven't seen that in a while. We saw this one coming a mile away, didn't we? If you watched last night's newsletter, it was that classic, right, hidden channel, right, off last night's newsletter, right, that pullback area. That was beautiful. So if you watched last night's newsletter, you were ready for that failure, right, and that crush going back higher there right after the opening bell in Asia. So congratulations, right, if you caught that dip, right, on the gold here today. And of course, looking at the gold now, the gold definitely is big, bad, and bullish right now. It's a trending market, which means I want to use channels and measured moves. It's a bullish market, so I want to find support levels, right? Those are the key things, right? If I'm bullish, I want to find support. Okay, the best levels in a trending environment, first of all, will be channels. Mark up that channel high, bring it down to that low. That creates my channel low. I'm also taking a trend line off of those lows as well. That's where kind of this little slice of green comes from right there, right? So this whole area right here is a beautiful support area. That looks great, right? That looks great. So I know I want to buy that area. What else could I do for support though? Well, check this out. We go up, we pull back, we go up, we pull back, we go up. I can take both of those highs and create those as support. So this whole area right here, in all reality, this whole area right here, right, you could say this whole spot right here, this is where I'm looking to be a buyer here tomorrow, right, on that gold. Ideally, right in this spot right there, right down, right to be a buyer here. Okay, so those are my key levels of support. Now, where's my targets going to be? Well, first of all, just to remind you, right, we came out of a big range here, right? So when you think about target right now, there's your range. So our target really, I mean, it could be a much bigger target than I have here for us right now. I mean, this could be a huge, huge target up here, right? So pendulum swing, right? The pendulum swing here is definitely in play right now, right? Pendulum swings down, pendulum swings up. So we have one hell of a potential move here. But for right now, though, I think what's most realistic is going back up to basically run the stops of the sellers in the market. I would assume that there are quite a few sellers who sold the pullback, and their stop losses are just chilling out here, hanging out right above those 82s. That is a big, big target for those buyers. And you'll notice that measured move I'm drawing out here right now puts us right about that same spot. So one leg, two legs, you can see we blew right through that measured move, right? They went right through that second leg, which almost always tells you to expect a third leg. Now, keep in mind, I'm simply kind of guesstimating right now. If we do get that pull back into where I'm looking for it, right, that would be my measured move now. But obviously, right, if they don't pull back anymore, the measured move will be a little bit higher. Right? Just be aware of that, right? We're going to, however far they pull back, we'll use that deepest part of the pullback, right, to measure it. So right now, it's very much just a guesstimate. It's an educated guess, right, as far as where that measured move will be. But this whole area up here is where we're looking to get long, or where we're looking to take profit, excuse me. Want to buy that dip, right, take our profit up around that measured move. Now, can you tell what pattern we're looking for? If you watch this newsletter, you can probably already tell me, right? It's a two-legged pullback. We already can see here now a two-legged move lower. Draw that trend line coming over, and now we know it's up and over for that buy, right? Now, the reason why I say that, up and over for the buy, right? It kind of looks like this one right back here, right? We got one, we got two, up and over, right, for the buy. The reason why I say that, guys, is because you got to watch out for two-legged pullbacks like this. And we talk about this a lot in the member course here, but if it grinds like this, stay away, right? Those grinders are usually going to trap and fail. They will. Okay, so if it grinds like this, stay away from that buy. What you want is you actually want to see it kind of go up around this high up here, right? What's actually happening is we see a strong run up usually. Buyers try to buy it, they get fooled, price comes back, stops out all those buyers now just in time to run up off that. This is kind of the classic psychology of a two-legged pullback, right? It starts off by roping in the buyers, right? And right when it gets back to that high, usually you see the sellers dump it right back in. Then, of course, it stops out those same buyers, right? So right when the buyers are getting crushed on their stops, right, they see it launch back higher again, right? I mean, isn't that classic? Isn't that exactly, well, that was what I just described. That was the first 3.5 years of my career, right? Buying high, selling low, getting in. Oops, they got me. Oh, just went without me, right? That's the way trading works the first couple of years of your career, unless, of course, you're working with somebody like me who can make sure you don't make those classic rookie mistakes. But if I'll tell you, when I was a rookie, it felt like the markets were watching me, right? Like they knew exactly where I was getting in. They ran me out. But when you understand the psychology of it, it makes sense, right? Buyers try to chase after it, but then it comes right back, stops them out, and usually it's coming back to that darn trend line. So as we draw that trend line down now, right, we go 1, 2, and again, up and over, and then go, because what it's doing is it's trapping in those buyers who try to buy it aggressively, right? It traps in those buyers and buy them aggressively right when those buyers are going, uncle, 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 get me out, right? Guess what? As soon as you hit the sell button out of that long position, it rips right back higher again. And this, of course, is we call a two-legged pullback, or a 2LP, right? A 2LP, two-legged pullback pattern, right, as we go. Now, this could also be incorporated with a failure. So, for example, if this is our trend line, I could always go 1, 2 up and over. Moving average comes over, right? And now, of course, I've got my two-legged pullback. I've got a failure set up now into a pullback. So this could get really good here, right? A failure pattern into a pullback pattern. Two-legged pullback into a failure, right? Into a breakout pullback, right back up to retest the high. And you'll notice there's one thing that we never do. We never buy the highest point, right? We're not buying as it goes higher. We're buying as it pulls back. We're not buying it as it goes higher. We're buying as it pulls back. That's the trick, right? And trust me, it's not easy. It's not. You know it's not easy. That's why you're watching this video right now. If it was as easy as just follow your instincts and use indicators, right? I wouldn't have been watching this video because it'd be easy to make money. It's not that easy. Right? Our instincts are horrible for trading. We are hardwired to do everything wrong. For some reason, it's instinctual to buy as the market's going higher. And then once we're getting stopped out, it's usually right when it goes up, right without us. So that's the idea there for the gold, right? When I get that pullback, that two-legged pullback. Now, I'm also watching to see if this turns into a range, because that looks suspicious. This could be a bull market into a trading range. What's the best pattern if it goes sideways? Two-try failure pattern, right? One try, two try. Let the bears try once. Let them try twice. Once they try twice, now we know I have the breakout bears and the pullback bears. They're all trapped in now, and now with the right signal, I can buy right into their stops. What about if price goes higher? What if the market jumps higher? Well, since we already know where the objective is, we have to be very careful. So what's the best pattern if price jumps higher? If price jumps higher, what's my big concern? My big concern is I'm buying high. I'm buying into resistance. So what's the best way to buy when you're worried about buying into resistance? Traps, traps. It's that 1, it's that 2. You got it, right? That trap low. That trap low is the best way to buy without, right, when you're worried about buying into resistance. Let those bears try once, let them try twice. What's actually happening here is you've got profit taking for the first one, then sellers come in the second one. That's why you want to wait for 2 of them, because the first pullback, right, the first one is profit taking. The second one are sellers, right? Profit taking, the aggressive buyers, the buyers who can't keep their emotions in check, they buy the first pullback. That's a FOMO, right? That's the FOMO trade. That's the I don't want to miss this, right? That's the FOMO pullback. You wait for that one to go, because that almost always will come back and stop you out, just to give you a much better entry for the professional pullback. All right, last but not least on gold, how do we reverse? What's the reversal look like? You got it. 1, 2, 3 down. Now, given this could be 1, 2, 3, it could be 1, 2, 3. This is not on a scale. It just has to be a 1, 2, 3. Strong move down, pull back to the moving average, mark up that low, mark up that low, mark up the high of the channel. There's your sweet spot, and we're selling right up off of that high. Beautiful, beautiful pattern. Where's my target? You got it. Back down to retest those lows at 67 and change. So that's the overall plan there on gold. Watch the trading range here, guys. Watch the range. The range is potential, right? So be careful. For example, you don't want to buy it as it goes higher right now, right? Because it could easily go shoot up and trap right back down. You get a range in your hands. Okay, so be very, very careful on buying those breaks higher on gold. Follow the plan, right? Follow the plan. And then speaking of the plan, I got 3 different things I'm watching right now on this euro. The euro is obviously bearish. No doubt about that. And the euro just loves those big round numbers right now. There's your 12,000. We're basically, right now, we are basically rotating between one big round number to the other big round number, right? We came off the 13,000 a few days ago, spent a little bit of time around the 13,000, then of course the big move down. So if history repeats itself, We've got 1, 2 legs down into a measured move. That's pretty obvious to be a major objective. We're right around the brown number, which we know is a major objective. We're also right around the low of that channel, which is also a major objective. The market's bearish, overextended. I would imagine tomorrow we're going to see a bit of a range-bound market here tomorrow. So as we go sideways here, what's the best way to trade that? 2 try failure pattern, right? 1 try for the bulls, 2 try for the bulls. Let the buyers try to break out once, right? Let the rookies buy the breakout. Let the more experienced rookies buy the pullback. I didn't say professionals because professionals wouldn't be buying that. Only thing professionals are buying right now is their way out of their short positions, right? They're not buying this low here right now. So let those buyers try once for breakouts. Let them try to buy the pullback. Once we know we got that pullback in, now wait for that nice strong signal and sell right into those stop losses. Now, could this reverse, right? Could we reverse going higher? Yes, we absolutely could. Because obviously with that big move down, what if they move higher here? What if they hold that pullback? Then what do we do? Good question. We mark up that high. We mark up that high. Bring it down to that low. You got it. Find that sweet spot. And we're buying that sweet spot. Again, right, moving from one round number to the other. Big target back around that 13,000 and change. Now, one more scenario. Overshoot, overshoot. We talk about the pendulum swing on the ranges. The amount of the move below the channel is oftentimes the amount of the move above the channel. Now, that sounds good in theory, but here's the problem. This could easily be a very bull market by the time we get there, right? So anticipate now, right? Anticipate, we go up, 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 right? That's a bull market. So how do we sell this thing in a snap back like that, right? What do? If we get this overshoot, see, here's the reason. This is the reason why overshoots oftentimes lead to reversals, is because momentum, right? Momentum swings that, it's the pendulum swings all the way back in the opposite direction. And now you've got buyers buying pullbacks now, okay? So if we do get that, again, you know me, right? I'm going to wait for that 1, 2, 3 reversal before I start buying this pullback. What I am going to do, though, is look for that. What was it again? What's the best short pattern in a bull market? The nested, right? The nested. Looks just like this. Up, once, twice, down, right? Watch again here, right? It goes up, right? Once, twice, down, right? So we go up, again, up, overshoot, overshoot, once, twice, down, okay? Because that momentum is shifting so strong, right, to the opposite side of that channel. So now we've got 3 pretty good scenarios here right now. Watching the range, selling off the high, and trading the reversal. So we are locked and loaded for tomorrow. And again, don't forget, right? Earnings season still in full swing here tomorrow, right? We're going to keep our eyes on the Nasdaq tomorrow, right? Nasdaq, of course, with the earnings report tomorrow coming out at the close. It might be a bit of a sleepy, sedated session, but again, as said earlier, we're going to come out tomorrow morning. We'll keep a close eye on it. We'll trade what we see. That's all we can do. News tomorrow, 8:30 Eastern Time. Opening bell tomorrow in our trade room, 8 o'clock Eastern Time. And of course, I want to see you there, right there with me. The best way to get with me tomorrow morning as a brand new client is to join as an advanced member. You can find the registration link right below the video right now to get started as an advanced member, and you'll get full access to our video classes, all the tech support, all the software, and of course, a lifetime membership to our daily trading room. If you're not ready yet for membership, that's perfectly fine by me. Right to the left of my ugly mug, that big red button that says free trial. Grab that free trial. It's got a free trading class for you to learn all of our favorite setups. You'll also get an invite to come out and join me as a guest in our trade room as part of that free trial. So join the free trial or get started as a brand new advanced member. And don't forget, if you have any questions, pick up the phone, send me an email, jump on live support. I really hope I get a chance to work with you tomorrow morning in our trade room. But for now, let's get some rest. Right? I can already see how long this video has been going, so I appreciate you sticking around with me tonight. It's worth it. It's worth it. Knowledge is power, right? And it certainly is, right, in the financial markets. As always, we'll see you guys tomorrow, 8 o'clock Eastern Time. If not tomorrow morning, we'll do it again tomorrow afternoon, same time, same place. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.